Investing can be uncomfortable at times. We understand that. And in periods of upheaval, it's a natural reaction to seek shelter from what appears to be a storm. If the comfort takes the form of the safety of a guaranteed investment, now yielding more than what we've seen in a number of years, then it's extra tempting to forget our long-term goals in favor of the short-term solution. But that could be a mistake. The 2008 to 2023 period was marked by a global financial crisis, a global pandemic, and a war. But in spite of these events, and to be clear, each was a negative for a balanced investment portfolio, the balanced approach ended up far ahead of the results of the guaranteed approach. We also see that while the GIC approach was indeed safe, with no short-term losses along the way, it barely ended ahead of inflation. And that shouldn't be a surprise. Taking no risk wasn't likely to do much other than to tread water, so the GIC investor didn't wind up further ahead of their starting point 16 years earlier when it came to protecting their purchasing power. We understand there could have been several times in this period where a potential investor sought the safety of a GIC because of events that shifted their focus to the worries of the moment and away from their long-term goals. But once an investor starts to allow the current conditions to dictate their approach, it becomes more likely that they go from negative headline to negative headline and stay in the costly safety of a short-term investment. One additional consideration, if you're investing in your taxable account, is that earnings from a GIC are typically taxed as income, the highest level of taxation for individuals. In the same taxable account, returns to a balanced portfolio are more varied, and a mix of capital gains, dividend income, and interest income will likely combine for a better blended tax rate versus the GIC. GICs and money market funds can be part of an overall investment strategy and can meet some of your investment goals. But as your investment time horizon extends towards major goals like retirement that could be over 10 years away, the short-term steadiness they provide is comfortable in the moment, but could be a barrier to reaching your long-term goals that need higher growth. We believe that most investors are best served through some sort of balanced investment approach for their long-term goals. In fact, you might already be benefiting from a balanced approach, as this is often the way large pension plans, such as the Canada Pension Plan, have evolved to meet the needs of their members. We've been through some turbulent times in recent years, and a balanced approach has come through for those willing to remain invested through the ups and downs. Short-term volatility is a feature, not a bug of investment markets. If you are able to take a longer-term view and a balanced approach, it will help you meet your financial goals.